Welcome back to the IEA's YouTube channel. I'm Emily Carver, Head of Media at the Institute of Economic Affairs. Today, I'm joined by Professor Philip Booth, Director of the Vinson Centre for the Public Understanding of Economics and Entrepreneurship. We may be 6 weeks from the March budget, but we are hearing many reports of what the Chancellor may or may not announce, with rumours Rishi is mulling over a corporation tax hike and won't be extending the stamp duty cut. Treasury officials have modelled a plan to scrap council tax and stamp duty and replace them with a property tax based on a percentage of a home's value. The scheme, which won't be announced in the budget, would be revenue neutral, meaning it would not bring in any more money for the Treasury. Should we welcome any measure that does away with stamp duty, arguably the worst, most destructive tax on the UK statute books, or would the property tax be a wealth tax in all but name? Philip was quoted in the Daily Mail this week saying property taxes in the UK are high by international standards. They are also appallingly designed. It is important that property taxes overall do not rise. Stamp duty and council tax must be abolished. This must not be a creeping wealth tax. So strong words there, Philip. Thanks for joining me.
Pleasure. Thank you.
So can we first start with a brief overview of council tax, stamp duty land tax, and just why are they so harmful?
Yeah. Okay, well, council tax is not so bad, so let's start with stamp duty. Until Gordon Brown became Chancellor of the Exchequer in 1997, there were two rates of stamp duty, 0% and 1%. And it was not a particularly onerous tax. It was probably better, it would have been better had it not existed. But at those kinds of rates, it was not a huge problem. Gordon Brown then increased those rates, and because of the increasing property prices, also it drew in a lot of revenue, which of course makes reform harder. Then George Osborne came along and changed rates radically, increased many of them, hugely complicated the system, or what sometimes seems like a vendetta on private landlords in the residential market, so that now we have something like 16 different rates of stamp duty, all applying in different circumstances. And because some of them are so high, there's lots of qualifications and exemptions for people who would fall into certain traps who are not intended to pay stamp duty. So, it's a system which, even in and of itself, and without the complexity which came with the Osborne reforms, is problematic because it taxes transactions. And in general, transactions taxes are bad taxes. So in the Merles report, Merles being a Nobel Prize winner in economics, who wrote or chaired a really excellent report on the tax system for the Institute for Fiscal Studies, he basically said, well, he said quite explicitly, I can't find anything to say in defense of stamp duty. So it reduces transactions. This is bad in the commercial property market. It's bad for the efficiency of property for business use. It's bad in the residential market. It stops young families from moving house into larger houses. It's can be prohibitively expensive for families to do that. Instead, they might then spend money on extending their house when they'd actually rather move to a larger house. Not quite so bad because of some of the exemptions, but for older people who want to downsize to a smaller property, that may also be very costly too. So people may end up, as a result of stamp duty, living in larger properties than they need to. And then, of course, there's the impact on the mobility of labour. So house prices in the southeast are quite expensive, but people who are, say, in their 50s, because of the growth in house prices, could often be living in a house worth £700,000 or £800,000 or something like that, and have an income of, say, £60,000 a year. So if they want to move jobs from, for example, Reading to Cambridge, and perhaps want to have the option to move back again at a later date, you can end up paying maybe half a year's net wages just on the stamp duty in order to move house. And this is just really ridiculous. Then there are all sorts of anomalies, such as married couples, if they own two houses, pay an extra penal rate of stamp duty brought in by George Osborne on the second house, But if you're not married and you're a couple, you can own two houses and just pay the normal rate of stamp duty. So it's a tax on marriage, which is a very odd thing for a chancellor to introduce. So stamp duty is absolutely an appalling tax and should be abolished, and whatever you replaced it with would almost certainly be better than stamp duty. Council tax is just a bit ragged around the edges, really. It's based on house values which are 30 years out of date, and some people argue it's not progressive enough, but on the other hand, it is designed to mimic a situation where people are making a contribution to the cost of local services rather than necessarily being designed to be a progressive tax. So council tax I'm a bit more relaxed about, except that the values are out of date. But stamp duty is really should have been abolished many years ago.
A really terrible idea then. So under the Treasury's proposal, council tax and stamp duty would be replaced with a proportional property tax levied on the existing values of homes. Certainly there would be winners and losers from such a move, but council tax isn't working and stamp duty land tax gums up the housing market, chokes labour market mobility. Would you agree? Can you see the appeal of a property tax by contrast?
I can certainly see the appeal of it. Now, because there would be winners and losers, it might become very difficult to implement. And some of those losers might be in a difficult position because they may have a high valued asset, but not necessarily the cash to pay the tax, which would create difficulties. But the principle is very solid. And it's solid really because there are two reasons why we should tax to a greater degree property for people who are living within those properties, which currently we don't tax at all. We tax by proxy through council tax and stamp duty. The first reason is that we don't actually charge VAT at all on houses. So if you spend money on housing, there's no VAT, but if you spend money on other goods and services in general, there is VAT. Now, if you charge VAT on new built houses, that will create all sorts of problems. So economists suggest that instead, because the value of a house is a kind of proxy for what economists would describe the user services that you get from that house as you live in it, which could best be represented by the rental value of that house, that you should perhaps charge something like a VAT rate of 20% on the rental value on both owner-occupied and let houses. And that wouldn't be a distorting tax. It's then also, economists also argue that when people own their own house, they're essentially renting the house to themselves. Now, that may sound like an odd concept to some listeners, but say I owned a house and let it to you, and you owned a house and let it to me, and we both paid each other rent, we would both have to pay tax on that rent in our income tax returns at the end of the year. If we swap houses and we own our own houses and live in them, we don't pay any tax. So economists often argue that you should pay income tax on what is known as the imputed rent from owner-occupied houses. Now, both in the case of a tax on user services of property and a tax on imputed rent, I realise this is all very complicated, but we are the Institute of Economic Affairs, and I'll get to the simple bit in a moment. In both those cases, there are lots of deductions that you probably ought to make. So if you make additions to your houses and they add to the house value, they add to the rental value and so on, you do pay VAT on those additions. So you probably shouldn't be paying VAT on the rental value as well. And in the case of taxes on imputed rents, we actually used to have these until the early 1960s within the UK tax system. And that's where the idea of the mortgage interest tax deduction came from, because if people borrowed money to buy a house, that's a cost of buying the house, and that should be deducted from the rental value. And this then becomes horrendously complicated to make these deductions. So I think most economists, though, are kind of quite satisfied that if you replace stamp duty and council tax with a tax on house values, that will be a reasonable proxy for those, if you like, perfect taxes, which economists would like to levy. And for example, a 1% tax on house values, which would probably be really quite difficult for many people to pay, but a 1% tax on house values would probably be equivalent to a 20% tax on the rental value of a house. So if you like, that might be the upper limit of what you might think of as being reasonable. Now, most of the calculations that have been done suggest that you could scrap stamp duty, scrap council tax, and replace it with a levy on house values of about 0.6 to 0.7%. Now, this isn't all bad news for homeowners, because ultimately these taxes will be reflected in the price of land for development. Because if homeowners are having to pay this tax, they'll be less willing to pay as much for houses. If they're less willing to pay as much for houses, developers will get less when they develop sites, so they'll be less willing to pay for sites for development. So it should actually, in the end, feed through into a reduced cost of land and reduced cost of housing. So yes, if I were Rishi Sunak, I would replace stamp duty and council tax with that type of residential house value tax. I would probably localize it, make it a local tax, which would actually mean that in those areas of the country where house values were highest, local authorities could probably raise less revenue with a lower tax. So you don't have to charge the same rate of tax on houses everywhere in the country. So you wouldn't have some of the problems that people have been talking about of people in the southeast paying huge amounts of money because local authorities could levy a low rate of tax in areas with higher house values.
So would this essentially be a type of wealth tax then?
Not really. Economists would say that this is really a tax on the services that you get from housing, which are currently untaxed. So in the same way that when I buy clothes, I pay tax on clothes. When I rent out a house, I pay tax on the rent I receive. This is really a tax on the services that you receive from housing, but through the back door. But you could say it looks like a wealth tax, but no, it's not. It really isn't a wealth tax. It's a proxy for the fact that that housing is an asset and a service which is otherwise untaxed, except through the peculiar mechanism of stamp duty and council tax.
Now, I want to get your view on wealth taxes in general, because the idea has been floated quite a lot during this pandemic as an idea for getting back some of the money we've been spending over the course of the last 10 months. What is your view on wealth taxes? I know, looking to France, that they have been used several times over the last decade or two, and have always been dropped. I think it's because they're overly complex and don't end up bringing in as much revenue as you might think. What's your view?
Yeah, so wealth taxes in general, where they've been brought in, they have been abolished. And one of the reasons is because they have to be complex in order to prevent certain egregious taxation of in particular circumstances. Again, rather like one of the practical problems of taxing house values, that an asset which yields no income, if you're paying a wealth tax on it, how do you get the cash to pay the wealth tax? So there are all sorts of problems, practical problems in relation to wealth tax. No, but the important thing really is that we ensure that we tax income that people get from wealth, which we do in the tax system. To tax that wealth as well is effectively a direct attack on property rights, and democracies are there to defend property rights, not to attack property rights. So I think from a moral perspective, as well as from a practical perspective, wealth taxes are totally inappropriate. And one of the big drivers, of course, of increasing wealth inequality has been the rise in house values, the rise in property values. And that should be something the government should do something about in other ways, such as liberalising the land use planning market to allow more houses to be built. But a wealth tax as such, I think, is just a terrible idea. Bear in mind too that when people accumulate wealth, out of income, they've paid tax on the income which they used to accumulate the wealth in the first place. So it is a double tax as well, which I don't think has anything to be said for it.
Yes, I think a lot of younger people who are supportive of a wealth tax in theory wouldn't be so if they had an opportunity to buy their own.
Absolutely. The solution to the problem of wealth inequality is to have an economy which allows people to accumulate more wealth.
Yeah. So lots of changes need to be happening when planning and such things. Now, on a positive note, as we emerge from this crisis, well, not on a positive note, the calls for tax rises will undoubtedly grow. We've already seen it in the press this week. How can we as free marketeers rebut these calls? How can we make the case for tax cuts and simplification?
Yeah, okay. So I think we must do both. We must make the case for a lower tax burden and a better tax system. So sometimes free marketeers are inclined to object to any change in taxation which might give rise to an increase in tax for some group or other, even if there's a decrease in tax for another group. So as free market economists, I mean, people who operate in the political sphere, I think that perhaps the issues are different, but free market economists should be making the case for both a lower tax burden and simpler tax system. So a simpler tax system, quite straightforward really. A simpler tax system will, for a given tax burden, lead to firstly a more lower costs of collection. It will lead to a situation where people don't have to hire accountants and so on in order to produce their tax returns and find ways to avoid tax. It will reduce tax avoidance and tax evasion. And because it will distort the economy less, will lead to higher economic growth, which will benefit everybody. A lower tax burden in general, the evidence is very strong that lower taxes, putting aside the moral case to allow people to spend their own income as they wish, a lower tax burden tends to lead to a higher economic growth. And this is going to be a real battle going forward as demography changes, as the population ages. The kinds of projections for tax rates just to keep government spending at current levels that the Office for Budget Responsibility have made are really horrifying. So it really is important to make the case for lower taxes, and just to be honest, we're going to have to pedal very hard just to stand still over the next 40 years.
Yes, I think so. Well, thank you, Philip, for joining me.
Pleasure.
Thank you very much. That was Philip, Director of the Vinson Centre for the Public Understanding of Economics and Entrepreneurship. If you enjoyed this video, please do give it a thumbs up and subscribe to our channel. See you next time.